Federal liability, which comprises federal debt and financial liabilities, increased 9.9% to 1.187 trillion ringgit from 1.080 trillion ringgit in 2019, Bernama reports, citing the Auditor General's report 2020. Meanwhile, the ratio of federal liability to gross domestic product is at 83.8% in 2020 versus the 71.3% recorded in 2019. The Audit Department proposed that the government improve its expenditure management discipline, empower efforts to generate revenue, and monitor its commitments on loan repayment. The report said the step is important so that surplus revenue can be enhanced to fund development expenditure and reduce the dependency on new loans. Auditor General Datuk Nik Azman Nik Abdul Majid spoke to the press at Parliament Building today. He described Putrajaya's position of depending on new loans instead of surplus revenue to finance the repayment of loan principals which have matured as worrying. According to the official audit, 98.06 billion ringgit or 50.4% of the 194.555 billion ringgit in new loans by the government was for the repayment of the principal of loans in 2020. That's an increase of 15.34 billion ringgit from 82.72 billion ringgit in 2019. Auditor General Datuk Nik Azman Nik Abdul Majid said non-compliance of federal ministries and departments with financial management has led to 620.07 million ringgit in losses in 2020. According to Bernama, he said the losses were due to irregular payments, loss of public funds and wastage. Breaking it down, he said of the 510.49 million ringgit in irregular payments, 499.19 million involved payments for maintenance service claims that were not verified at the National Security Council level. Meanwhile, of the 104.79 million ringgit loss in public funds, 81.69 million ringgit involved unclaimed penalties not imposed by the Immigration Department, and 4.79 million ringgit involved equipment that was received late and not installed at Istana Budaya. The report said the Auditor General has submitted 29 recommendations to enable corrective action and improvements to be taken. 4 are for verification of financial statements and 25 for compliance audits of federal ministries and departments to be considered for implementation. Malaysia's exports booked a record monthly value of 110.8 billion ringgit last month, after increasing 24.7% from a year earlier. This was the 13th consecutive month of year-on-year expansion for the nation's overseas sales since September 2020. Chief Statistician Datuk Sri Dr. Muhammad Uzair Mahidin said imports increased 26.5% to 84.7 billion ringgit. Total trade grew 25.5% to 195.5 billion ringgit, while trade surplus expanded by 19.1% to 26.1 billion ringgit. According to the Department of Statistics, the nation recorded higher sales to Singapore, China, the US, Indonesia, India, Hong Kong and Japan. Demand was mainly for petroleum products, manufactured metals, palm oil-based products and electrical and electronic items. As for the increase in imports, the highest shipments came from China, followed by Singapore, the European Union, Indonesia, Taiwan, the US and South Korea. These imports included electrical and electronic items and crude petroleum and chemical products. Lotte Chemical Titan Holding saw its third quarter FY21 net profit plunge 87.2% from the previous quarter as higher feedstock costs squeezed margins. Earnings came in at 48.84 million ringgit on the back of 2.24 billion ringgit in revenue, which was down by 12% due to lower average product selling prices and demand following the rise of COVID-19 cases in the region. The group declared a special single-tier dividend of 18 cents per share. That's some 410 million ringgit, representing about 50% payout from its earnings. This special payment translates into an attractive yield in excess of 6%, based on its share price of 2.74 ringgit, last traded on October 27th. It will be independent of its dividend policy, and its board, upon closing of the financial year, will determine the subsequent final dividend payable for the financial year ending December 31st, 2021. On a yearly basis, its net profit dropped 38%, mainly due to under-provision of deferred tax expenses as well as lower EBITDA. Quarterly revenue increased by 15.3% thanks to the increase in average product selling prices following the firmer feedstock costs. Its shares closed 4% lower at 2.63 ringgit, valuing it at some 6 billion ringgit. British American Tobacco Malaysia saw its third quarter FY21 net profit climb 23.4% to 78.68 million ringgit, boosted by an increase in market share. However, its filing to Bursa Malaysia showed quarterly revenue slipping a marginal 2.3% to 613.02 million ringgit. The group declared a third interim dividend of 26 cents per share, amounting to 74 million ringgit, to be paid out on November 25th. This, the group said, equates to a 94% payout on its third quarter earnings per share and a dividend yield of 7%. BAT Malaysia Managing Director Nadal Salim said, the group is encouraged by its latest quarterly performance, which marks its third consecutive quarter of financial growth. However, he noted, consumer affordability continues to remain under pressure due to the high tobacco tax rate, with 57.9% of the market dominated by the black market. To effectively manage the issue, he said the government must enhance enforcement, not increase excise, and address the price gap between legal and black market products. BAT Malaysia's share price closed 1.26% higher at 14 ringgit 44 for a market capitalisation of 4.12 billion ringgit.